on the scanners. I'm still kind of just focused on these two. Cone and UONE have the most volume of the ones that I've been watching. So,
shares of Shopify off the highs now, 39.06.
You see how these stocks pop up. Traders are definitely jumping on them quickly.
Broke Black Friday records with $3.36 billion in sales. That Sandy Hotel
especially if I'm going to trade with big size, I want to feel comfortable on the stocks I'm trading.
Good Monday morning.
All right, well,
ENYA, Tenaya Therapeutics, receives orphan drug designation for the FDA.
Morning, Mike.
For its gene therapy for genetic arrhythmogenic ventricular cardiomyopathy. That's Tango November Yankee Alpha.
1950, it did a false break right here up to 2045.
PILD and RCOS, Gilead and Arcus Biosciences announcing update on joint TIGIT program for mental analysis of ARC-7 study in non-small cell lung cancer.
Good morning. Can you guys hear me?
But was volatile and did get some opportunity on it. But also
India,
a little bit of a false break
Delta.
right here. So at this point, I'm not sure.
NAVB, Nvidia Biopharmaceuticals announced 50th participant enrolled in company's phase 3 trial in rheumatoid arthritis. That's November Alpha Victor Bravo.
Order filled. Order filled. Order filled.
SPCB, Super Comlin's new project in Northern California, valued at up to $4.25 million.
Not that far off from breaking
Charlie
that.
Bravo.
High on UONE here was right around
I can hear you
45.
fine. Good morning.
Hello, hello.
A break of 45 would be could lead into a break over the VWAP, but the high that candle 44.70, then the low is 43. It's a big range.
VRAR Glimpse Group Unit.
It took a starter there at 43.
Immersive Health entered into technology and IP assignment agreement with Insight VR. That's Victor Romeo Alpha Romeo.
I want to see if it's going to break over. I stopped out at 43.11, so I lost 20 cents on that. I'd rather just be very precise on my timing. It either works right away or it doesn't, so I'm back out. It's a double top right now. I'm going to wait for a 1 minute pullback. Carve, yup, this could be a break of VWAP, potentially. I wasn't really watching this one.
Give me a second. I'm trying to get this speaker to work. I'm not sure if you can hear me or not, but the speaker turned off and now it's not working.
Deficiency notice from Nasdaq
Got above Mondays.
regarding failure to comply with requirements to timely file quarterly report on
Carve at 14.94.
That's Bravo Bravo
I want to see if it's
India
going to
Golf.
break over 15.25 for the break of VWAP. Watching, added at 15.20. Now looking for it to break 15.25. And then a squeeze up to the $0.50 at 15.50.
WULF Terrawolf
So
updates on mining operations and cost-cutting initiatives.
I want to see it rip through 15.25.
Whiskey Uniform Lima
There's
Foxtrot.
17. And then 15.50, the $0.50 is what I'm looking for next. So watching here over 15.20. Got 17, 18, there you go. There's some volume, 20.
Still trying to work on this here. Give me a second.
5, 40. It's going to hit the $0.50.
I had a bunch of orders in. I had some down here to fill. They all got filled.
Tools announcing up to $20 million
except this one, which I just moved up a little bit because I'm anticipating that
at something else. For a
Move
second.
back up to the
So looking at,
yesterday's close, and of
it's
course
ticked
all the
down.
lines aren't there. Oh, you
Buying
gotta
call
love
right
this.
here at,
You gotta love it.
17.05. I'm gonna try to do a dip on this and catch a pop back up to 1780. There's 1780. I'm in at 17.
Now just move that one.
Now I
Beautiful.
want to see it pop back up over 18. There you go.
All right, let me see if I
Here's a
get
nice
this
dip there.
sound
That's a
on
$1
here.
share. Looks like Carb stopped me at for the rest.
All right, now can you guys hear me?
The stop was. Wow. Look at ULNE.
Yes.
Yes,
we can hear you.
Okay.
Cooperation agreement with
Now I hear a bunch of
Management
people
Bureau of
talking. Hang
Shanghai
on.
Power Trade Zone on vocational training online platform. That's Juliet Zulu.
Ross, Warrior Trading. Ha! Must be on that thing. Let me shut this off. Is it off? Okay, off. Alright. Alright, so looking at the economic calendar, we really don't have much for today. It's next week that we're going to have, I mean, at the end of the week, Wednesday, Thursday, Friday. Starting Wednesday, we got JOLTS, good trades, balance, GDP sales. No, GDP growth rate. That'll be big. I'm not sure if you guys saw the news in China. China's starting to go on lockdown, which is going to do what? It's going to affect the overall economy, right? It's going to affect the import of goods and services. So, you know, as far as this market gaining any kind of, looking at the daily time frame, you know, we're still just kind of stuck in this area. You know, we're stuck below this area right here, the 12,000 mark, pretty much, you know. We did have this nice rounding bottom, right? We have this rounding bottom, which is good, but if we're looking at our divergence here, you know, we're kind of breaking that structure of the rounding bottom, which is not good, right? But again, you know, when we looked at this on the daily time frame, as far as the Elliott wave, all right, let's just go ahead and I'm going to draw this Fibonacci level out here from, and I'm only going by what's on here. We should probably go to Thinkorswim if we want, you know, a correct number on it. But, you know, we can't even get back to the 61.8 fib retracement, right? From the highs of December. You know, we're just struggling any way you look at it. So, you know, the odds of this, you know, continuing to go up, there's really nothing out there. I mean, unless some magical news comes out, you know, there's nothing out there to really push this up, all right? You know, what they talked about as far as the interest rates and stuff like that, right, easing, you know, but in reality, are you guys seeing easing anywhere in the stores? In fact, I just went to the dollar store. I always go there to buy my chocolates. I love the little Andes mints and Lifesavers, and I'll get my mouthwash, deodorant, stuff like that there where it's $1, right? Why not? I'm frugal, whatever you want to call it. I don't like spending money. But anyhow, my bags of candy now are a quarter of the size, all right? So what I got 3 weeks ago for $1.25, granted they raised their price, I'm now getting a quarter of that bag. And the Andy Mints bags, there's 6 Andy Mints. There used to be like 20. Right, so the thing, you know, things are getting worse from a standpoint of us, you know, retailers or consumers going out there to purchase goods. Right, nothing's getting better. We went to Subway yesterday, and at lunch, you know, typically my wife and I would get the same thing, and it's $14. Yesterday it was $23. Right, so the prices are still going up through the roof. So there's really nothing out there that is good as far as, you know, the economy's concerned. And now with China going into lockdown, you got to think it's only going to get worse from here. So to see any kind of, you know, do we anticipate a Christmas rally or a Santa Claus rally? You know, I don't think we're going to get anything even near, you know, what people would anticipate. And now with the whole thing with Russia, I mean, not Russia, but China, you know, I'm just not...
The only thing is, the news is spinning it. They had the best Black Friday in history. That's what's out there in the news right now.
Yeah,
So
I personally don't believe that. I mean, unless it was all done online, because we go out every Black Friday, and I forgot this year that it was Black Friday. But yeah, but when we went out this year, there was not a single line, right? All the stores were like completely full. Normally, when we get there, everything's gone. It's empty. So, you know, either they're lying, like, you know, I don't trust the media one bit. You know, they're out there telling you one thing.
I agree.
When the second, you know, when what's really happening is being brushed under the rug. Just like, you know, with the numbers they factor in for, what do you call it? They took out the two most important things, food and gas, right? Why did they do that? Because then it pushes that number so high, it scares everybody, right? So, you know, I don't pay much attention to the news, rather just the charts. But if we're looking at this, you know, like we were talking the other day, you know, if this was going to be 1 and this was going to be 2, because remember, the Elliott wave, it's the same in both directions, all right? This could not be 3 and 4 because 4 can't pull back into this range. So that would mean that this would be 3 and our 4 would probably be around this trend line somewhere. Right? So, I mean, this is definitely an Elliott wave pattern, you know, to the downside, which means that we're going to have a lot of room to come to make that number 5, right? Because we're going to have 1, 2, 3, 4, and then 5. So even looking at the smaller time frame, right? Let's go back here to the 30-minute and look here. No, we can't go to the 30-minute. Let's go to the 15. Because I'm just looking at from that rally from last week when the numbers came out. Which would be back here. Right? We were thinking this was going to be our first leg up into the Santa Claus rally. But we had, you know, you had the 1, 2, 3, 4, and then 5, and then we had this extra rip, so we would have to relabel that 5 and get rid of that. But we did 1, 2, 3, and then we had a correction. Then we had 1, 2, 3, and I really can't talk more on the Elliott wave with you guys, because on a correction pattern, there's 5 patterns that can happen, right? You can either have like 3, 3, and 2, or a 3, 5, 3, but I don't want to get into that with you guys right now because it'll just confuse you. But as far as this goes, I mean, you know, this would have been your A, this would have been your C, and this would have been your D. And now we have this, which didn't even take out this high, right? So, you know, the structure in and of itself is failing. So that's more bad news for any type of a Santa Claus rally, right? Because here, we should have at least, right here, we should have at least came back and retested this area, and we failed to do that, right? So that's kind of concerning in and of itself. The fact that the pattern's breaking down is concerning. We are, you know, the 61.8 fib retracement from this high, you know, if you guys want to use that, right? We have our 100% level right at the top. We brought it down right to the bottom of this, and we're kind of meandering around that. Remember back here, I was looking for that 50% fib retracement, and we never got it, right? So that indicated strength, but then it failed. It failed to reclaim that high to the left of us. All right, so that's, you know, this all tells a story. You know, everything in the market is like a story, and it's all speaking, right? So let's look at the 5-minute, because remember yesterday or last week I was telling you they were selling it off pretty hard in chunks overnight, and then we got that, you know, big down movement, right? Look at, this is always my telltale signs. When you start seeing these big bars, right, they're selling blocks of this, right? This really big bar, right? These are order blocks of big orders being sold, you know, over time, but they're being sold pretty quick, right? They'll sell them over time. They'll sell them over time. They'll retrace price a little bit, and, you know, they're just keep selling it. Like, so now where we are right now, as far as today goes, right, I'm definitely looking for that move back up to the overnight high, which is right here, this 11,785, and that's where I'm, you know, I'd like to start shorting it to go back to the downside. But with that said, here again, we're getting that rounded bottom formation, right? Which would help us, our theory of coming back up to this area. All right, but we're just going to have to kind of play this by ear and see how it is, because if the market's going to make any type of a movement, it would be today and tomorrow, right? And then we're kind of going to pause going into Thursday, Friday, and Saturday. Now, with them saying that the interest rates could be easing, right? How much of that is viable? Because since they said that, the market went up that day. But remember all the news that came out after that, right? That initial lowering kind of ripped the market up, and then it kind of digested the rest of the news, I guess, and then sold off, right? And again, the market's, doing anything but it should. So I just want to trade extra cautiously right now. There's really nothing out there that's going to make the markets really do anything. Like if you guys are in or thinking the bottom's in for your long-term stocks, guys, I wouldn't be buying into anything right now. It's not the time. I think we have a much bigger bottom that's coming. That's me personally, from looking at the markets, trying to digest everything. But again, just keep your positions short and sweet, your position sizes. Let's talk about that Elliott wave one more time right now, because I want to start every day with that, right? The Elliott wave is a pattern that's going to form like this, right? The rules of the Elliott wave state that your first leg and this is number 3 and 5, right? 1, 3, and 5. And that just represents your first leg, your second leg, and your third leg, all right? So your number 2, your pullback or your correction, and number 4, right? Number 2 cannot pull back and take out where it began. Then that's not the beginning of an Elliott wave, all right? Number 4 cannot pull back into number 1's territory. All right, your second leg must be bigger than your first leg and your third leg. Those are the rules of Elliott wave. All right, so starting tomorrow, we'll start talking about the corrective patterns. All right, the patterns when it pulls back. All right, and what type of patterns you can look for. Right, you got a zigzag pattern on a pullback. You have like a bullhorn pattern on a pullback. There's several different patterns. We'll start with the first one tomorrow. But do you guys have this down now that we've been talking about it every day? Your basic Elliott wave. Do you guys have that down, the rules? All right, your first leg, your second leg, and your third leg. Your pullback cannot come back to ground zero. And your second correction cannot come back into one's territory. Do you guys all have that down as of now?
Yes.
All right, if anybody doesn't, I'm still going to talk about this. We're going to talk about this for a month, but we're going to be adding to this. So make sure that you understand the basic structure of an Elliott wave pattern, all right? The basic rules, all right? Your middle leg has to be your biggest between 1 and 3, right? Your first correction cannot come back to where it started, and your second correction cannot pull back into your first level, into your first leg. All right, so that's the basics of Elliott wave. We'll move him off of there. And let's see what we got going on here as far as all these lines. If we can't get these a little bit smaller.
Benzing market update, S&P futures down 30, Dow futures down 197, Nasdaq down 77.75, crude is down $1.81 at $74.47, gold up 90 cents at 1769.70.
All right, now let's hope all my lines are on the 2 minute. And they're not. There it is. Shake it around a little bit. Alright, now you can stop moving. Alright, let me just make sure that that is the overnight. Doesn't look right.
If we could set the Fibonacci, that's the one thing I'm not clear on how to set it. I know you've gone over it. And I don't know how to get my numbers on the fib to the right. It's always on the left.
It's on the left side of your chart?
Yes.
Yeah, let me just find this pre-market from back here. Doesn't look right. Could be right. 25th. Was that Thanksgiving? No, this was Friday. And we closed. Yeah, so that is about right. I'm just going to drag it right there. Alright, so here it is. If you guys traded that pre-market, you had a nice little range there. This would have been your first breakout, but had you looked left, well, you know what? If we actually did this, we should have had that in our range, because you would have started your range from this point. So that wouldn't have been the breakout. This would have. That would have been an iffy one to trade for me anyway, because if you're looking at this from your, you know, your zone, yeah, you're right on the 50% mark. But look at those big bars leading up to that. Right at, that would have been a tough one to trade. I would have traded this second bar based on that 1-2 retracement. But that would have been a tricky one to trade because you had these big bars leading up to that area on that. You guys understand the range, right? And how to trade the range. Even right now, I mean, even from the pre-market, you could consider this whole area one big range. You know, you could consider it a range, right? Alright, so now let's look at the overnight price action. This right here, this line right here is coming down from December. And that brings us right back into that 100% from last week. Or, you know, from that move that we had. Oh, no. Hang on. My laptops, I didn't plug them in. They're starting to die. Hang on. There we go. All right. Crisis averted. And let me get that one. All right, good to go. All right, so this line here is coming down from the daily time frame. I don't know if I drew it with you, but you see from December. And notice the high here from the other day. Right here. Look where it comes with this. If the bulls were to reclaim this and bring it back up, it's going to bring us right into that downtrend. Right? If we look at this bigger time frame as a channel, all right, we could bring this right here and then draw another one right up here. That's where it's going to take us. All right, so we're obviously clearly in a downtrend, right? Clearly in a downtrend. And notice where this is going to connect. If these bulls can bring this up, this is from that rally the other day. All right, so if they bring this right up, it's going to be very, very hard for them to have any type of a rally whatsoever, you know, just based on that there's nothing left out there to cause this market, I mean, to go anywhere, right? Outside of, you know, whatever news they're going to have coming up, there's really not much the market can do to reclaim even this area up here. You know, it's going to be really tough. Like I said, unless they can pull some kind of rabbit out of the hat, you know, there's really nowhere for the market to go but down. So anyhow, the Fibonacci levels, if I'll just stay on this daily time frame for a minute. So if you're going to use Fibonacci, all right, if you're starting from the bottom, right, you want to bring it up to your highest point in time, okay? And if you're starting from the top, you want to bring it from the lowest point in time. So the highest point from the top would be right here, right here. And I keep it over here so you can just kind of see it off to the left. And then you want to bring it down right to the bottom of that wick. All right? So if we did that, that's what your Fibonacci would look like. Notice here now, you know, we sold off down to the 61.8. We got a nice bounce up to the 23.6. Then we sold off again. This would kind of be like an 81 something retracement, 81.3, I think. I don't know why it's not on here. I know I redid mine, but these aren't, yeah, these show, but they're really off the grid. You know what, I wonder, let me just see if we can put on it. Let's see, no, it didn't do anything. Huh. Yeah. I wonder what show price does. Yeah, it's just showing you the price levels of it. Anyhow, and then we came back up to the 50%. So that's, you know, that again, this is exactly where you would have your trend lines, right? Your support and resistance. So if you know how to draw your trend lines, again, whichever one you want to use, it's just a matter of preference, I guess. But the Fibonacci isn't going to give you every area as you get down to the smaller time frames. But that's how you do it. If you want to start, you want to start from the top and bring it all the way down, and vice versa. So let's go down to a 1 hour and we'll look at it from a 1 hour. That's how we have it right here. From this high, I brought it down to this low, but in reality, let's see if we can bring it down to that low. Yeah, now it makes a little more sense because now we came down to the 61.8 here and it wasn't kind of floating in the air. Let me go back a little further because let me just trying to think here because technically we don't have a new low in, so we really should be doing this from here up to here. From here up to here. We should be going from the bottom to the top. From this low. Not the ones we were using. And now it makes a little bit more sense. So the 61.8 is right here. What's that?
I have a quick question about this bib.
Yeah.
So basically we're going from the highest point to the lowest, or the lowest to the highest in regards to if we're looking for calls or sells or buys. So
well, you know, you really don't want to go off of the Fibonacci for your like, I don't know how I want to say this, but these are your key areas, your 61.8, your 50, and your 38.2. They're going to be the most heavily traded areas on the Fibonacci levels. So notice every time we came down to the 61.8, we kind of got that bounce, right? But, over here on these couple, this is where we got caught that day, where it came back down. We had 1 bounce, 2 bounces, 3 bounces. This was that day that we got that extra push down before we moved up. That got us, that shut it down. But anyhow, you should be looking for price reversals, right? Whether it's on the Fibonacci or your trend lines, right? Again, your trend lines are going to do the same thing the Fibonacci's doing, but you don't really want to base your buy and sell orders on that alone, right? Because there's plenty of times where price will just shoot right through that. So if you're planning to trade and say, hey, it's going to touch the Fibonacci, I'm going to buy, that's not really a good game plan, right? You want to have more confirmation, looking at the Fibonacci, and now right here you had a double bottom and divergence. That now you have more information, right? Was there anything on the economic calendar? You know what I'm saying? Is any events happening, like the options expiration or the quad with triple witching hour? You just want to look at the overall big picture. What is the overall
PBLA Panabella announced first patient.
What is the overall direction of the market? You know what I'm saying? You just want to just don't blindly, because something fell at 61.8, don't buy it. You know what I mean? This was a good buy because we were overextended, right? Make sure you check in your higher time frames. Like, even if we look at the hourly or the daily chart right now, what can we see on the daily chart, right, as far as what we're looking at? Well, right now, right, on the daily chart, we're holding that 50% level, but at the same note, right, we're making a double top and we have divergence forming, right, on a daily time frame, okay? So notice, you got to pay attention to this kind of stuff, because you'll get trapped and caught on the wrong side of the market. Now, this is a daily time frame, so this isn't going to move as fast as your other indicators on the lower time frames. But this is how part of, I'm doing my top-down analysis. I'm utilizing the daily time frame and what I'm seeing here, right? And right now I saw a double top with divergence, but we're in that key area right now because we're at that 50% mark on both of these levels. All right, so now we're going to play that game of, are we going to hold or are we going to break and come back down to make a new low down here, right? Remember, I treat these two indicators just like I treat the chart, all right? And I treat all of the indicators like I treat the chart. I actually rely more on the indicators than I do on focus on price action. Like I said, I can trade the charts without ever looking at the chart just by looking at my indicators. All right, that's how heavily I like to use these two indicators, as far as determining what our next move is going to be. And again, I can read price action clear as day, right? If you guys can't read price action, you have to understand price action to tie it in with the indicators. But I could read price action like it's a book. All right, so I really like utilizing the indicators, as that extra confirmation. But again, if I wanted to, I could trade just off of this without looking at price ever. The indicators are that reliable, in my opinion, as far as trusting them for your exits and entries. So going from that daily time frame, let's look at the 4-hour and see what the 4-hour is telling us. Now, the 4-hour, we're kind of in that bottom area, and the 4-hour is going to move a little bit faster than the daily, right? Because it's a 4-hour, not a daily. So, I'd be looking at this area right here. Let me use a line for that. It doesn't look good. So on the 4-hour, I'd be looking at this area that we're at right now, because before this was support, now is it going to be resistance? You see what I'm saying? So are we going to get that pullback and then get divergence on here? Or are we going to break this and come up to the 50% mark? Right? Now notice the 4 hours down here, but look over here to my left. Look where we are on the 30-minute, right? The 5 minutes coming down to that 50%. So, getting to understand the relative strength and the percent B is going to be a huge part of your overall trading. And that's why I want you to get to understand the divergence, right? You have to master that divergence, before we can really go on to using all this in conjunction with divergence and understanding how to use this just like you would read price action. You know what I'm saying, guys? It's going to be a lot of information, but I want to do it in a fashion where you can learn it. I don't want to, teach you this and then that and then this and then that, and you don't grasp any of it. This is why I'm so adamant on you guys focusing on trading divergence, identifying that divergence, right? Because that's the first step. But there's so many ways to look at the RSI and utilize multiple time frames that you're going to get lost and not learn any of it if I try and teach it. Now, I'm talking about it, right? But don't pay too much attention to what I'm talking about, because we're going to be talking about it forever. You can learn it, but I really want you guys as a whole to focus on the one thing that I'm teaching you about it right now, which is divergence, right? Only look at it for divergence, because I'm telling you now, what's going to happen is, instead of just focusing on divergence, you guys are going to start focusing on the 50% line, and then you're going to start looking over here, and you're not going to really know what you're looking for. You're just going to kind of remember something I said, and you're going to end up taking bad trades, because you're going to say, well, this was at the 50% line, and blah, blah, yada, 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 but you don't have all the pieces to the puzzle, so don't try and put the puzzle together. You know what I mean? Just focus on the piece of the puzzle that I'm teaching you right now, because that's what's going to...
Does the 30-minute chart to catch up with the 4-hour chart? Is that how it works?
No, they'll never be the same. Each time frame is indicative in and of itself. They're never gonna be the same as the other. The closer you put the time frames, the better they're gonna look. But they each have their own agenda. So let's jump down to the 1 hour. Now notice the 1 hour, we touched that 50, right? We touched that 50% line, and I'm not seeing my 50% down here. Oh, you really can't make this stuff up. All right, so we're touching that 50% here. So now we're kind of building a picture, right? If we go back to the daily, all right, we're looking at the daily. We're at the 50 on the daily. Now we go to the 4 hour. No, I don't want that. We go to the 4 hour, and we're at that level of support. Or that could be resistance, right? This level here was resistance before, or support, and now look at it. We're almost there. We're not there yet, which would help us confirm that yes, we should see that upward movement to at least fill that gap, right? Because we obviously have room here to reach that support level or that resistance level, right? You see that tiny bit of room on the 4 hour chart. So that's kind of that confirmation that, yes, we have that room to go up to that, fill that little gap up above us. But let's keep doing our analysis from the top down. Let's go to, I don't see my 2 hour here. Doesn't surprise me. All right, so here's our 1 hour. All right, our 1 hour, we just hit the top of that 50%, the top of the 50%. So price is coming down. It bounced off the 20 on the 1 hour. Let's go down to the 30-minute. All right, so now we're at the 30-minute chart. And if you look at this channel, all right, we broke it here. It pulled back. Again, this is an abnormal thing to do, to break it to the upside, re-break it to the downside, right? That right there, speaks volumes to, the support of the upside, right? For some reason, it failed to hold right there on that first attempt breakout, which is very, very odd. That's very, very odd. And you wouldn't want to come and say, well, maybe that was the trend, because it wasn't, right? This was the trend. You don't want to start making things up in your head as far as, you know, what the market is doing. So, you know, this is a sign of weakness right here. You know, you can't call this divergence at all because it's not, right? Price made a lower high, so did your indicator. Now, this is a form of hidden divergence. All right, that's a form of hidden divergence when the indicator makes a higher high than the price did, right? That was showing you that there's more, you know, pressure to the downside. And that's one of those things that I look for on the smaller time frames. Let's see if I could find something like that unfolding right now. Let me go to the 5 minute. No. But this would have been a good play if we were here, right? We made a higher high and a lower high. That would have been an excellent play for a short. You guys see that, right? That's the divergence I want you guys focusing on, right? We made a higher high in price, but a lower high on our indicators. That would have been a great short right there. Now notice here, we didn't have any divergence, right? Price made a higher high, your indicators made a higher high. The only play that we could have played there was the fact that both of these were oversold, right? That would have been a play. And let me just see. I think this is going to be the same time. 3:30. No, that's not the same time. That would have been... Oh, it's off my chart, so it's not even there. But anyhow, this is what I want you guys to be focusing on. Just that divergence, right? Because once you guys master the divergence, trading these channels are going to be so much easier. All right, so let's go ahead and channel this out. All right, we would make our line on the bottom, and then we're going to move our line to the top, and then we're going to redraw our line for the channel. Now, why do these not look? Let me get rid of this one and do it again. We're going to move this to the top, and then we're going to draw another channel. There, that looks better. Alright, so that would be our channel for right now. And notice, if you had your channel drawn, how that divergence would have helped you make a good trade, right? You should have been, well, if we're in an uptrend, you know, you would only be wanting to buy the bottoms. That's what I'm teaching you now. But if you have your channels like this, right, and you get the divergence, you can go ahead and trade it. But like I said, you know, trading in the direction of the trend is going to give you your better opportunities. Look at how quick price reacted at the bottom of the channel going up, right? Look at how quick price reacted at the bottom of the channel going up, as opposed to look at all the choppiness when it got towards the top of the channel, right? Why would you want to sit in that fighting money? All right, now this was a good move, but you had divergence, right? You had divergence right here as well, but look at the fighting you would have had to do, as opposed to just trading in the direction of the channel. How much easier it is to make money, right? Look at these bars coming off the bottom of the channel. Here's the bottom of the channel. Look at the profit in 6 minutes. 2, 4, 6. 2, 4, 6. You would have made more money than you made in 2, 4, 6, 8, 10, 12, 14, 16, 18, 20, 22, 24, 26, 28 minutes. So in 6 minutes, you would have made more money than you would have in 30 minutes, right? If you traded this to the downside, it would have took you 30 minutes, and what would have happened in that 30 minutes? You would have had a mental mind game, right? You'd be done for the day mentally had you stayed in that trade to the downside. Whereas if you were just patient and waited for price to come down to the bottom of that channel, and then you traded it, in 6 minutes you would have made a massive profit, and you would have been mentally ready to continue trading for the rest of the day, right? Because now you have a positive mindset, You were patient, but do you see how trading in the direction of the trend is more favorable than trading against it? You know, that's what I'm trying to drill in your guys' heads with the channels, right? Is to trade in the direction. Now again, even with that channel, treat the channel like a range, all right? Make that no trade zone of the channel. Okay? Keep it just the way it is on a range. And every time it came out, you could have, you know, took that trade. Right? This one, again, was at the 50%, right, for this particular trade. On this particular trade, you know, it wasn't really giving you much information on these, right, because it still would have had room to go, but it is a channel, right? Even the same thing with this trade, right? It came down, but here, you know, we're holding above the 50% mark. On the percent B, on this one, we're not. Right, it broke down several times, but if you're going to trade a channel, that's the way you're going to want to trade it, right? It is a channel, and it is in a direction, all right? And if you watch that pre-market game plan, you know, the odds of this going back up to test that, to close this gap, right? So now you have some pieces of information, right? You're expecting the market to pull back up here, right? You're in a channel. This one here on this particular trade, you know, this was at the 50. This one pulled back, but they were both in the general same area. This one here also, right? This one made divergence. This one made a double bottom. This one kind of made divergence. But again, you want to look at this as a whole, right? If you had this drawn off, you are in a channel, take the trade. You're going in the direction where price should head back to, all right? Remember, the pre-market game plan is all about analysis, all right? Are they going to want to keep selling it off? The answer to that is no, they're not going to want to keep selling it off. They're going to want to bring price back up to sell it at a higher price. Okay, is that always going to be the case? No. All right, but generally speaking, they're not going to just want to keep selling it off and off and off, right? They're going to want to sell it and bring it back up a little higher. Sell it and bring it back up, right? Sell it and bring it back up. All right, so you always want to keep that in the back of your mind. Now, looking at it from a bigger picture, let's go back to the hourly. We'll just go to the hourly. Where are we in terms of, you know, selling this, right? Remember when we were back here, I was telling you guys, you know, they're not going to want to sell it in this area. You guys remember this whole area. I was talking, you know, if they were going to sell it, they would have already sold it, and they didn't sell it, right? But buying in this area is like going to the auction. This is where they want to buy their cars, and this is where they're going to want to sell them, right? Buy low, sell high. So now looking where we're at, it's you know, we're in unprecedented times, okay? The market's really not doing a whole lot of anything, all right? We're just pretty much ranging, you know, ranging and channeling. So if we were to take this whole area, all right, if we were to take this whole area, right, even looking at this as resistance, right, looking at this area as resistance, we broke it, but man, it's not holding it spectacular, right? It keeps breaking through it. So to say that the market's bullish would be lying to yourself, because look at, again, you know, if this area was resistance, look at how the market structure is not respecting that as a good, strong, solid support area. Okay, because notice how well it respected it as resistance, right? Every time it got close, it sold off, but then when it finally made that bullish move up, look at how it can't hold it. It's not able to sustain itself, right? It keeps breaking through this level, and then it'll peek its head above, and then it falls back down. So in reality, you have to look at it for what it is, okay? It's a very weak uptrend, okay? Because in a strong, you know, directional market, in a directional biased market, okay, you're not going to get a break like this to the downside once you broke through a resistance area. Okay, so this is showing us, you know, something's not right, right? That, to say the least. Something is not right. When you can break through a major resistance area and then you can't find that support, right? That's telling you buyer beware, right? Because you're coming all the way back into the range that was below us, right? Because this should have been a very strong support area. It took, what is this? How many months is this? From October, let's even go back further. Yeah, so from November to October, this was a massive area of resistance. And now that we broke it, it's not able to hold itself. So that in and of itself tells me, you know, it's not in favor of a really strong rip to the upside, right? Whereas if we came to this area and we just held it and bounced off and to the moon we went. We didn't do that, right? The market didn't do that this time, right? What did it do? It came, it bounced, and then it bounced again, and then it got weak. And then it poked its head up and came back, and then it kind of boing, 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 right? So the momentum of that ball, if we got a ball, it's like boing, boing, boing. You see what I'm saying? Because here, once it broke, that ball should have reloaded and shot off, right? So we were anticipating this being that, you know, the first leg of the Fibonacci, getting our third leg and our second leg and our third leg, right? We were looking at this as kind of that Fibonacci, not Fibonacci, Elliott wave, with our first leg, our second, and our third. But, you know, it's I'm kind of doubting that now, right? This is going to just be a failed first leg attempt. So, looking at that, you know, knowing that, here we had a nice rounding, you know, if you wanted to call that a cup and handle, right? We had a nice rounding, but look at the action here, right? That would pretty much even cancel that out. Like, that's no longer valid right now, right? And you could, you know, how long do you want to say a cup and handle, right? Or how long do you want your handle to be? Are you going to be one of those people who dream and say, well, it's a cup and it's still a handle all the way down here, right? No, that's not how you trade. All right, for a cup and handle, you know, the handle, you know, max right here. All right, for a cup and handle, it's not going to be a cup and handle or a cup and handle, right? That's not a cup and handle. The further you get away from an actual cup and handle. So don't let your imaginations run wild, you know, when you see patterns like that, and, you know, don't try and play it hopes and dreams and convince yourself that, hey, you know, it's still a cup and handle. No, a cup and handle would be about a 50% retracement, right? If you looked at your bottom of your cup to the top of your handle, the 50% is pretty much going to be your max for your cup and handle, and now we're down at 75%. So, you know, it's no, in my opinion, it's an invalid. I wouldn't even consider that anymore. So, there's that. Let's go back to our 2-minute chart and see what we're doing. We're getting close to the bell. All right, so now what are we doing? We're breaking that, but let's go ahead and just kind of move this down like that. All right, let's do a little sideways channel going on here. And I just want to keep this all in line together, right? I like to keep my channels to look like a channel. I don't want to get in this, I don't ever want to get in a place where, you know, one channel is looking like this, or one line looks like that and the other like that, right? That doesn't look good at all. I like to keep mine where they're both kind of an equal distance apart from the bottom to the top, meaning from point A to point B, they're both the same length, right? That's how I would do my channels. I don't like them being all crisscrossed. But, you know, in the back of our minds, we could still look at this like, you know, technically did we break? Well, yeah, possibly, but because we have that area above us, right? The 1178, let's see what we do here at the bell. All right, so right now, looking at our 30-minute, we have room to come down to that 50% mark on the 30-minute. Looking at our 5-minute, it's looking really nice for a bounce right now. I mean, it's primed for a bounce, right? It's looking really, really good. So I'm going to buy 2 right here if we come down and break out of this to the downside. Again, we got a few minutes to the bell, but this is how I'm doing my trading, guys, right? This is what I'm looking for my, my good trades that are going to make me money. All right, we did come down to this, right? We adjusted our channel based on this right here unfolding. All right, we're at the bottom of that channel. But I would anticipate, never rule it out, that break and then that rip right back up, right? That's why I put this where it is. If I don't get filled, I don't get filled. There's always plenty of other opportunities. Sending my kids a message. They're getting ready to go on the bus. All right, so that's what I'm looking at. Again, I have it right down here. Now, what could happen? Right? What could happen at the bell? They could try and trap in those bears again, right? Bring it down to here, bring it down to here, or bring it down to here. I'm not taking anything off the table. After I've been boned several times on our live streams, I'm throwing that in there because that's the way the markets are working right now. Right? The unexpected is happening all too often. So now I'm expecting it to happen, right? I would expect them to come back down again, right? Because nothing the market's doing is making sense. Even though we're looking for that move to go back up to the upside, I'm going to keep my profit target just below the highs. All right? Just below the highs. Now, with all that said, what can you guys see right now? Can anybody tell me anything about what they're seeing? Can anybody do any analysis? Are we in a wide state or a narrow state on our Bollinger Band, on our indicators, on our moving averages? LOL.
We're in a position right now. I mean, I guess to go, long.
Well, our indicators, remember, these are at the 50% mark. That doesn't mean it's going to hold, right? These could come all the way right back down and the market sell off, but the 5 minutes looking good. But I'm talking about as far as our moving averages. We're kind of in a narrow state right now, which is a good state to be, right? So once they start widening themselves out, I like starting the day like this when we're in a narrow state. Because once we get into the wider state, or once they start moving away, we can follow the trend from where it breaks right now.
So it's right at the VWAP.
Yeah, it's right at the VWAP. Even on our higher time frames, we're right at the volume weighted average price. Right? So a rip up to fill that gap, how high, how many points away is that? Well, I guess right here, 86 points away. Right? That's going to put this price far away from the volume weighted average price. Go ahead, if somebody's trying to talk, please talk. I want you guys to ask questions. T-minus 3 minutes. All right, now we have this downtrend, right? We have this downtrend. If we break this, we'll buy it again on the pullback. But you see why now that was a good trade? when we were down here. Right now it's too far away, but that would have been a good trade to take. But I'm expecting the unexpected. And what are we looking for now as far as the unexpected pullback goes, okay? We're going to look for price to come either here. Now this is just, what I'm doing here is only for that opening bell to try and trap in the bears before it makes its way back up to that, to fill that gap above us. And then once it does fill that gap, let's see if I can bring this down enough. Alright, here's price action, bottom. Right, the bears are going to want to bring it right back down. And then once we break that, we're looking for that 1-2 continuation. Alright, so we're looking for the bulls to bring it up, and then the bears for that 1-2 pattern. One minute. I'm going to take this off now just because the pattern's done. It's gone. That trade's over. And now we're going to wait for our new trade. Here they come. Even that one wouldn't have got filled. Alright, so today's going to be rope in the bulls. Alright, we're not going to buy this, right? We're not going to buy this. Alright, let's see what they do in this area. Are they able to hold it? Strong momentum. I mean, it makes you kind of chuckle at this kind of strong bullish momentum. Like, what's causing this rally, right? Look at these indicators. Oh, that would have been a really good short. That would have been good. I was stuffing my mouth full of Andy's mints now that I was telling you about them. Watching this, watching. I don't want to short it now because now with that bar, with that strength reclaiming that, we're probably going to get another nice green candle to this area. So I'm going to be patient, even trying to scalp it. But I'm paying attention to my indicators over here to the left, alright? And this one. Gets up there, if it gets right to the top of that wick, I'll put an order in there. I'll scalp it. There we go.
Order filled.
Just for a quick scalp. Now, that's what I was talking about. If that was looking up there for that
order filled.
So we should get a retracement to get those filled. And of course not. So I'll put one more right there, and then that's going to be it.
Order filled.
There we go. Expect the unexpected. My goodness, these bulls.
Order filled.
Still down $23. This level right here is where I would put, if any of you took a trade, if you want that guarantee fill, that would be my guaranteed fill zone. Would be looking left to the top of that. I wouldn't be looking right here. Not right now, right? Not until we got up in this area. Once we get up there, it's a different ball game. But really to the left, this area and this area are the only two areas where we will have any type of whatchamacallit, a resistance zone. So now I'm liking that. I'm liking that
Order
for a
filled.
short. Really oversold. Look it up. Look it over here on your 5-minute chart. That is super duper oversold.
Order filled.
For a quick scalp. I want to draw this level out. There we go. So these are the 3 areas. 1, 2. This is my favorite area. Once we get here, then I'll start shorting it for, you know, for the runners to come back down. But now we're up, right? We got 4 contracts and we're up, but that's because we took those 2 winning scalps, right? You can always manage your position as long as you don't go 10 contracts on your first trade. That'd be dumb, right? You always want to allow yourself that extra room, right, to add to your position. All right, so these are the 2 areas. And then, of course, our third one is the overnight. The overnight inventory. But again, we are just super overextended on all of these indicators. I'm going to go ahead and
Order
scalp
filled.
it again. And then sell 2 right there. Scalp it again.
Order
We're
filled.
getting really close up here. Let me get rid of these.
Order filled.
All right. I'm going to keep orders up here also. So if we get filled on those, that'll be great. I'm actually gonna. I'll just leave that there. We got these 2 down
Order
below
filled.
us. That one got filled. So what, you know, when you're doing this, you're just averaging your cost, right? Which is why we're still up. If you guys understand that, right? When you're adding to your position, even though it's originally losing, right? It's now winning because you're buying it at or you're selling it at a higher price. If that makes sense. Hopefully it makes sense. But this is what I mean when I talk about managing my positions. And now we got the almost there. Are we going to make it there? See, now that we're getting in this area, now we want to start looking for that divergence. All right? Even on the 5-minute, you know, we're really sold over here. So now you just want to wait and look for that divergence. Let price pull back and then come up, make it another high right into this area. Look for that divergence. So that's what we'll be looking for. We got our orders. This one's got
Order filled.
Good. Good. Coming right.
Order filled.
Right for that high, right? Right for that overnight inventory. Now, does this make any sense to you, right? Does this big move make any sense outside of the fact that we were 100% net short? Right? Is there anything in the economic world right now that, or any information, any news, any earnings, anything that could have accounted for this, right?
The only thing that I found interesting is the VIX gapped up severely from the close on whatever the last close was Friday. It gapped up, and now it literally gapped down a little bit this morning.
Yeah, it's down
now.
2178 right now. Right?
Yeah.
And when the VIX is down, you know, the market goes up, right? Because when the VIX is down, it's showing that there's no fear in the market. Well, again, you can't really rely. You got to remember all the VIX, the tick, the ADD, it's all owned by the casino, right? It's the casino's information. You know what I'm saying? So they're going to do whatever they want to do with that. You know, that's not based on. I mean, are our minds as individuals tied to the VIX? You know what I'm saying? I mean, do you think people are running to the market right now telling the bakers to buy everything? China's going on lockdown. Please buy Tesla, buy Google, buy everything you can. Here's $10 billion. No, they're not doing that. So the VIX right now is garbage. I wouldn't be trusting that one iota. You know what I'm saying? Because money's not coming into the market right now. I mean, I don't know that, but I'm not as smart as the rest of them out there, but I wouldn't be buying anything right now. So, you just got to look at the indicators for what they are, an indicator, The VIX is always going to do the opposite of what the market does. So the market goes up, the VIX goes down. The market goes down, the VIX goes up. It's just another thing you can look at, but I wouldn't put too much weight on it as far as on it in and of itself to rely on just the VIX, because the VIX is literally going to do the exact opposite of what the market's going to do. It just mirrors the market to the opposite direction. That's it. But the VIX is the volatility index. But again, I'm not a smart guy, but I wouldn't be putting money into the markets right now. And I don't think anybody's out there running to their brokers this morning, especially with that news from China saying, hey, please buy everything you can for me today. This move here is nothing more than filling that gap, right? To put the market in balance. That's what we were expecting to happen. That's what's happening. Look at our indicators, right? We're watching for divergence. Like I said, we'd expect this one, and then the bulls to come right back up here, and then we'll get that divergence on the indicator, and then we can short it right back down. Now again, if you want to look at this, on a 15-minute time frame, I mean, still, any way you look at it, in the bigger picture, we're in a range. We are in a range. No matter how you look at it, we're just range bound right now. Right? If you looked at this like a range, we don't have any double tops yet, right? So we don't really have a true range, but we definitely have the bottom of the range. So we would just go ahead and mark off this range. And the market is doing nothing more than range bounding right now. So let me get back. Like I said, the bulls would want to bring it back to that area. But I don't think they're going to have a fighting chance of doing it. So right now, I'm not going to add. We got 4 position on here. I'm not going to add right now until we see clear divergence. All right, this is what happened to us last week, where this just kind of went sideways, right? And the reason being is because we're only a few dollars away from this area. Let me see if there's anything that I didn't look at. Yeah, so there's another area right here.
Order filled. Order filled. Order filled.
There's another area right there where we have the potential, right? They're going to trap in some bulls. So these could be 3 more areas. But I'm saying that as far as waiting for divergence. Because if this thing just goes sideways, this would be the next area I'm looking at. But I would not trade this until we get divergence, right, to the downside. That's what I'd be waiting for now. I'll put one order right here, and then I'll put another one closer to that white line, and we'll see if we get any type of fulfillment on that. But again, I want to wait for clear divergence. I mean, I'm loving the fact that these are so oversold, right? The 30-minute, this one's kind of pulling back, but the 50% mark is right around here. And again, of course, it doesn't have my indicator there. No, it's way down here. So there we go. I mean, mission accomplished so far. We came right up to fill that gap, which was expected. But again, I just want to wait for a clear sign of divergence, because you never know what they're going to do. Everything that should have been happening hasn't been happening, right? We've just been kind of in la la land. But the other thing I want you to pay attention to, look at where price is in relation to the 20. All right, the 20 is really not that far away from the 200 yet. So you could possibly see this type of move, right? If we were going to make our own 20, which would bring us right into these areas, right? So why not sell? Why not bring it up, right? They're going to have the bulls trapped, right? They're going to have them trapped, but they're selling into this strength, right? They don't want to sell it down here. They want to sell it up here. So why not sell it to whoever's willing to buy this at these prices? You know, why not sell it to them, right? Some of you could look at that as, you know, that's immoral, right? If you were looking at, you know, the housing market or something, you know, selling a $10,000 house, right, for 1.5 million, you're like, why would you do that? You know that's not right. Well, why? Because somebody's willing to buy it for that price, right? Same thing right here, you know, unless I missed some wonderful news that came out, you know, they're selling this to unsuspecting buyers, right? To people who aren't paying attention to what's really going on. All they're seeing is a bull run. They have no idea that we have an overnight
Order
capital
filled.
fill, right? They have no idea that we could look in left. We could potentially come in here to
Order
here,
filled.
but then it's going to sell off, right? So even though we got filled and we got filled for a profit, but even though our original orders were down here, I was hoping they got filled right away on a pullback, but it didn't. But we're still green, right? We're still green.
It's about to fall back now.
You know, the only reason why I'm not doing anything is because of this. We haven't got a single pullback in structure on this RSI yet. So what this tells me, especially with this pulling back, is that we're going to go higher and we're going to come here or here. Right? Right now, you could say we're starting to form Pac-Man, right? And that's how Pac-Man starts. When this is going up and this one is coming down, right? We're going to start seeing that, and then he's going to want to eat some people. So I'm going to be patient, and I'm going to wait until we clearly see divergence, right? This is exactly what we got into last week, where I got mad and shut it down because we pulled all the way down to here. Remember? And then we went up the rest of the day, right to the areas that we talked about. I don't want to get caught in that trap again. So I'm going to be patient, just like Mike was, and Mike traded the right way that day. So I'm waiting for that to take place, because with this riding the way it is, you know, we have this area and it's only 10-15 points away, right? We haven't had any big pullbacks yet, right? We had just a very minor pullback right there, very small. So let's see what we do here. But I'm definitely waiting on that divergence, because with this being so close, I'm going to anticipate that coming in. Will it come though? It doesn't have to come, right? It could just stay where it is right now. But we should definitely see that momentum shift back to the downside. And look in here, you know, look at the bottom of this, but this is kind of what we just marked off here. So here's the level of resistance, and our next level would be 11,810. But I tell you, give them credit though, right? Give those bulls a credit. They're willing to buy it. See, that's something I won't do, right? I don't want it. You never know where the market's going to go, right? You never know where they're going to bring it to. They could have brought it right here, and the next bar been a solid red bar down to here. You know what I'm saying? And that's why I don't like riding that wave to the areas where they're not supposed to go. Right? We were anticipating that to come back here, but I'm not one of those people that would trust them bringing it all the way back there. You know, now if go ahead, Mike.
He wasn't like to.
What's that? I'm still in this with 4, but like I said, I don't want to take that without seeing divergence, right? Because what could happen now, right? We pull back to the 50 and bounce, right? We pull back to the 50 and bounce. We pull back in this area and then bounce up to this area. Now then, we should see divergence, right? Then I'm going to add to that position, right? I could close this out and just take the $135, but I'm not. I'm gonna let it run and add to it, right? Now, like I said before, if I want to be guaranteed fill, where would I do that at? Now, looking at this chart, right, we have our first area here and our second area here. So, you know, what would the odds be? You know, where would you guys determine your 1-2 pullback, right? First of all, I'm not looking for this to go up today, so that's off the board, right? But I would be looking for some type of a retracement, right? So to retrace, I'm not sure if they bring it all the way down here just to bring it back right back up to here. I wouldn't see that unfolding as a possibility. All right, so we'll just have to see what they want to play. I think that would be too far of a stretch because, you know, the direction is not going to be up today. So, but it very well could be. You never know what they're going to do. But I would not want to play this to the upside today. Now, if we were in a strong, bullish, trending market, right, then a pullback to this area would look good, right? To this area, the possibility of the top of your channel, then for that continued rip. But for what they want to do today, you know, this could be the turning point right here. Not the turning point, but where we're going to kind of do that one and then try and get that second move up to this area, and that's where we'll see divergence, and that's where we'll enter. All right, it's all about just being patient. Now, can you trade this? Yes, we did. I did trade it, right? 160 something bucks, but I don't want to cash it out right now. If we get down to this area, I'm going to go ahead and take my profit right at that 50% mark. And then we'll go again. See, notice if we touch this, I'll close it out. And then I'll go in and then just add to it, because that would make more sense, right? We're expecting it to go back up. But talking and moving my stuff around, I'll probably miss the opportunity. So now we should see some divergence forming. But again, we're not going to see that until price gets back up here, right? Then we'll see the divergence. But now is going to be our best shot or opportunity for that divergence to happen, and then we'll ride it back down. And all we have to do, right, all we got to do is see price come up above right here, right? Or even if price comes back up right to this line and we got divergence, then, you know, we can go ahead and short it, right? Because if price comes right back up to here, but this doesn't, then we know that we're on the right side. I'm just reading the news here. I don't have the SPY open. Let me look at it on my phone. I'm reading it on the MNQ on Thinkorswim. Actually, let's see what their news is all about. I never gave it a look. Crude. They moved to the downside. Look, and they say Wall Street poised to open in negative territory, and then it ripped up. But we were expecting that, right? Why? Because we're expecting them to fill that gap, right? If the market was 100% net short and everybody expected the market to go down, what would be in the best interest of them to do? Rip it up and take all their money, then bring it back down, right? Remember, this isn't a game where everybody gets rich, right? This is a game where they want to get rich, not you, right? That's why so many people fail in this game. So, doesn't look like they're going to bring this back up, but I still have these 4 on. We're just going to have to kind of be patient and see. There is a lot of people trading today. Right now we got 90,000 people in this bar. But imagine buying this thing up here, right? Woo-hoo! If we get a pullback, I'm going to take 2 off. Just to kind of lock in some profits, because I'd like to re-add up here. If we get a bounce with divergence, I'm going to add like 5, 6, 7 contracts.
Is that would that be considered tweezer tops on the top there?
Yes, on your 5 minute, absolutely. Even here on your 2 minute, that's tweezer tops. I just got it blocked by my thing, but tweezer tops, double top. Right, the 5 minute, it's kind of a weak tweezer top, but this one was as well on the 30 minute.
Order filled.
All right, so we got the 1 closed out, or 2 contracts closed out. Now let's keep an eye on, do we bounce off the 20? Right, we're coming back down here now. Again, my overall direction is bearish, right? The only thing we were looking for this morning was to come back up here. And I know a lot of you guys question, why don't you ride that, right? Why don't you ride that? Because, we're not in a trending market, right? The market conditions are not, in my opinion, where I would want to risk riding a wave that I don't know how far they're willing to bring it, right? Yes, logic and theory says we should come back to fill the entire gap. But we've noticed back here, we still have a couple of little minor gaps that haven't been filled over the last couple of weeks. So I don't want to take that, initial trade. And, I guess we could go long, on a big bar like this. But, again, I'm just not that type of a trader. You guys can trade any way you want to, any way you like. I just rather go where I know the money is, right? Because, for them to pull it back up here isn't 100% guaranteed. They could have done this and then they could have sold it off, right? Because if you look left, right, in these type of markets, if you look left, this bar right here took out everything to the left of it. And that could have been all that they wanted to do, right? Just take everybody who was short out and then tank it immediately. I've seen that happen 1,000 times. That's why I don't chase it. Even though I was anticipating this coming up here, that's exactly why I don't buy it on the way up. Even though I'm anticipating it coming here, under these market conditions, I won't do that because it's not guaranteed, right? We can come back up here later on down the road. Remember, gaps like to get filled within 24 to 48 hours, but notice that gap below us. It's been 2 weeks and we haven't came back to fill that yet, right? So it's not guaranteed every time, but 99% of the time, they'll want to get filled within 24 to 48 hours, all right? But under these market conditions and with that news from China, because China, they sell us everything we buy. Everything we get is made in China, right? So that's going to make it worse on us and our economy as well, right? But, this would have been the only area right here where they could have potentially brought it to the upside, right? Because they could have just took out these shorts, possibly this one. This wasn't guaranteed. This was, anticipated. We anticipated it coming up here, but I won't ride that under the market conditions that we're in. Now, if this was pre-December, absolutely I would have rode that up to that gap, right? Because we were so bullish, I absolutely would have rode that. And then I would have traded it to the short side like I had planned. Right? So now we're in that area. Now we're looking good. All right? We came down. We're getting that 1-2. Now let's see where price comes in relation to our indicators. All right? This is what we've been patiently waiting for. Now we're going to come up, and hopefully price will come either right to this point or break through it and we get that divergence. That's what I'm going to add. So let's just pay attention to that. You guys have any questions? Are you guys able to identify your channels?
Yep, I'm just listening your thought process through it, so it's helpful.
Russo, the Fibonacci, do you understand it, or what are you missing on it? Like, if you wanted to use the Fibonacci right now, Russo, you would have to go like this, all right? I really wouldn't use it on such a small time frame, but if you wanted to, you would have to go from your lowest to your highest point. Like right now, you could use your Fibonacci if you went from your lowest to your highest point. All right, let me get rid of some of my lines here. So that's what your Fibonacci would look like. Let me move this over.
It follows the levels. I kind of like that too.
That's what I was saying. You know, our trend lines are going to be the same as the Fibonacci if you're drawing them correctly. But look where the Fibonacci falls, and this would be the one that's missing. Right? We have our trend line. This would be another one at the 38. This would have been at the 50. You guys see that, right?
Yeah.
It's nothing
It's
more
than...
But that's what I was saying. If you're drawing your trend lines correctly, you don't really need this. But if this is going to help you, you know, you do it whatever works for you, right? Whatever works for you. Like, you know, when I trade, this is what my chart looks like. That's it. That's all I have on my chart. I don't need anything else, because trading like this, right, you can clearly see where your levels are, right? You can clearly see where your levels are. Even getting rid of these two things here, so you're just focused on your one chart. I mean, you could shrink this down. You can clearly see where your levels are. You know, you can leave this here for your bigger levels, right? Your bigger picture levels. Maybe use your Fibonacci on the 30-minute, you know, but this is all you need to trade. I mean, you don't need all that other stuff, right? I mean, here you can clearly see you're in a channel. You know, here was kind of a little range. Channel, 1, 2. It's really, you don't need anything. And the less you have on your charts, the better, right? These here, even these levels here, to get rid of these, I just don't like those lines, but it shows you, not that, price levels. You can get rid of all of those lines. That's all it is the opening price, the high price, the low price, and the middle price. Now everything is gone. Clear, clean chart. 20,200 volume weighted average price. Your indicators below. Crisp, clean, nothing to distract you. That's it. That's all you need. Right? This is my orders. That's it. I got my volume profile here. I know the most volumes traded in this area and this area. We're getting a little bit of volume picking up in this area, but right now we're just waiting for that 1-2 pullback. Right? I
was just trying to learn how to use it, and I'm used to drawing my own price levels. But it's nice when they do match, just to see that. But
yeah, so like here, you couldn't draw it until you had a high and a pullback, right? If you did it prior to that, you would only have this high if you did it from here, you could really only go to this high right here. You know what I'm saying? And even that one would have worked. But if you wanted to draw it like this, just move it off so it's out of your trading view. You know what I'm saying? Just make sure, you see my hand in the line? Make sure that that is right at the bottom, okay? Right at the bottom of that right here. You want it to be 100% accurate if you're going to use it, because it's not going to give you, if you're not making it 100% accurate, you're going to get false readings on it. So now that you made that new high, you could come over here. Sure, you're starting from the bottom right here, all right? But I'm going to do it over here so it's off of my chart, all right? Notice my crosshair line, right? My crosshair line is right at the bottom, and I'm going to bring it right up to the top. You see my crosshair line there, right? And then from there, I could, you know, inch it over so I could kind of see it. You know, if I wanted to open up my chart a little bit more. But this way, it's still perfectly on there, right? It's still on there. And now I kind of have levels off to my right, but not obstructing my view of my chart, right? So it makes it a lot crisper, cleaner, you know, but I don't really need it, because all the information I need personally is right here in front of me, right? You know, I'm relying more on the things I pay attention to the most are the 50% line, which this one disappeared again, big surprise. And oh well, I removed everything. That's why, my fault. On all time frames and divergence, right? Those are my biggest key takeaways that I personally look for, right? If we're holding strong on the 5 minute, right, I'd be looking to buy, but not right now, not today, right? Today I'm looking for this to continue down, right? I'm looking for that downward momentum, but I'm just waiting now for divergence. I mean, we're almost right back up to this high. We're not almost, but you could see what I'm saying. But look at your indicators. They're doing nothing like they did here. You know what I'm saying? So that's showing you that, you know, it's getting weak. But I'd still want to see price come up into this, you know, in this relative range, so we get a decent, you know, indicator. If we don't, we don't. You know, we just miss it, and then we'll have to wait for it to do its thing, you know, kind of 1-2. We're still in with 2 contracts. But do you guys have any questions? Anybody on anything? And there's a nice hard sell-off. Now, some of you guys would be tempted to buy that. I mean, to sell into that. But look where you are down at your bottom, right? You're almost to that 50% mark, all right? You know, this could just be them, like, testing, retesting, right? Because, you know, in theory, we should come and at least get a somewhat of another little bounce. Now, maybe this was it. Maybe that's all they're going to get, right? Maybe that bar was the last they're going to get. You know what I'm saying? That could be it, and then it just sell. But, you know, I wouldn't want to be selling as we're going down, right? I'd rather be selling as we're pulling up, like looking back at the 50% mark once we get under it. But, again, because doing that right here is now chasing it. You know, and you don't want to chase it. All right, we're getting this little pullback here to the upside. All right, see how much easier it is too? Right, we started in that narrow state, but now you could clearly see here the 20 and the 200, right? Now the 20 and the 200, we had a lot of space between the two here, a lot of space here, right? It just makes your trading chart so much cleaner, and you can pay attention to less, right? It's just so much cleaner. You can see the narrow state very easy. Right? You could pay attention to your 20, right? The most important indicator you have, or tool you have, your 20 and your 200. but we started spreading apart to the upside. So now we're looking for that 20 to come back down and then cross that 200. Let's keep it right there. Right, so now what would we want to do? Right, let that price get under that 20, come back up, and then start selling it. But now that I'm looking at this, I'm talking so much, let's go ahead and draw that channel. Right, draw that channel. Take your first bar, bring it down right here to this point, redraw your channel. We should have done that on that green bar, but I was talking. Alright, now we got that channel drawn. Typically your first touch is going to be your strongest. But again, we're just in this zone now where we're hovering around the 50. And I really don't like trading around the 50 unless I have, you know, a clear direction, or, you know, we're in a trending market. But now we're not trending. We're just kind of stuck. Right? So this is a tough place to really want to buy or sell. But let's see, if we come back up here, I'll go ahead and short it again. If we come right back up to here, I'll put an order in there to sell, and I'll bring it down here for a little bit more profit. But we might not get up there again. But again, I'm not one to chase it. Alright, I already have my game plan for today. Right, I'm looking for that downward momentum. But what do we do right here in this area where we're double bottoming? Right, I'm waiting for this to stop the congestion, stop the noise, and get a clear, decent signal. Alright, this here would have been a good trade had we been on point. And I think I have some orders I need to get rid of. Yeah. This is my take profit for my last two. Those last two were doing good, you know, 160, 60 bucks. But once we break out of this little structure, actually I don't even have to wait on that. I'm gonna let this run. Where's our lowest overnight low? Right down here. Where the bear's going to want to bring it, right back down here. So I'm going to put this take profit. I'll put it right here, right below the 23.6, just to give myself some room, right? And we'll see how that plays out. But I'm going to let these run. I'm going to start letting them run and see what we get. Now if we come to the 50% mark and we start bouncing, right, maybe I'll close it out, but I don't really see us doing too much of anything with that news coming up towards the end of the week, guys. That's going to be key. And again, wouldn't be looking to short it down here where we are, right? We want to short it up here. Right on our indicators, we want to be shorting closer up here. Again, I wasn't expecting this to just sell off. I thought we would reach that second target. I didn't think that from the pre-market, but after we look left now, the odds of doing that were pretty good. So we're getting a nice bounce here now. So let's see if we could get a short position in here. The way that moved, that almost looked like a liquidity grab. Right, just grabbing that liquidity, running this right back up. Possibly now we'll break out of here. But that, my friends, is what you got to watch out for. That's why you don't chase it, right? That quick drop, get all them bears chasing that, and then rip it right back in your face. right? That's what I was saying. I don't want to buy when the indicators are down here. I mean, or sell, right? That's when you should be buying, right? Make sense? Don't chase. We have an order waiting patiently up here. If we get filled, we get filled. If we get close, we'll see what we do. Maybe I'll put one right under that 20. But I'd have to get rid of these because we could come right back into this area. But we got 2 there. Let's see. Right, again, we're just kind of in that wait and see type of an area, right? We just got choppiness, sideways movement, and these are the things you got to, you know, pay attention to. All right, just be vigilant at all times. Don't go chasing anything, especially these types of bars, right? If this was selling like it just did, and you jumped in there, and the indicator was down here, then you deserve to get spanked on that short, right? Because you should never be shorting when you're down in this area, right? So pay attention to what I'm teaching you, and don't chase anything, right? But you gotta learn to focus on price action and where you are in relation to price action. All right. But again, the channels are going to be so much to learn. So hopefully you guys are starting to learn, you know, a little bit, right? We're drawing the channels. I only want you selling the down channels and buying the up channels, but being patient on divergence, right? And then the Elliott wave theory is all tied into channels. So hopefully you guys are learning, you're understanding. You know, if you have questions, please ask your questions, because you know, if nobody's asking questions, we're just going to keep rolling forward, and, you know, you're going to get left behind, and I don't want that. I want us all to be on the same page. I want you guys to become consistently profitable, you know, within the next 2 months. You guys should be ready to trade your live accounts. You know, you could go take a funded account challenge, pass it, and use their money to trade. Top Step offers, you know, things, or you could just stick to your small account. It's up to you, but if you can learn this, you can go trade a funded account, pass it with ease, and get access to $50, $100, $200,000. But learning this, if you guys don't ask questions, I won't know where you are.
Bang bang?
Yeah.
Do you pay attention to the volume profile?
On the side, right here.
Yeah, do you pay attention as far as where the price action is, you know, in relation to where that is?
The only thing I look at it as is I would pay attention to these areas, right? Only because that's where the most amount of volume has traded, but outside of that, I wouldn't use that for anything else. You know, just to know that, you know, these 2 areas are going to be key for now. And once we break those, then, you know, then we'll obviously have a new area to pay attention to. But that is the only thing I would ever use that for. Because, you know, it's just going to tell you where the most amount of traders were interested in a certain price. Right, so right now you have these 3 areas, 1, 2, 3. And that's why we're kind of chopping around right here, you know. So the next area would be, you know, right in this area here and the bottom of that area, the high and the low. Right, so it's just kind of in conjunction with what you already know. You know what I'm saying? But it's just good to have that, you know, if you want to use it. I brought it up there for you guys just to kind of give you like another little prequel to, you know, where support and resistance could truly be, as opposed to where it's fakely being. You know what I'm saying? I mean, look at the volume up here at the top. There's nobody really traded that, right? A lot more volume came in this area, and where price had congestion, And this is where the most amount of volume traded today. So these two areas will be important. And notice they're right around that 50%. And somewhat, yeah, it's a little lower than that. So, but it's in, you know, the bottom here. Right? Notice how all this just ties in together with your support and resistance. So really just, you know, much more being patient in those areas, not jumping at anything, waiting for price to get out of them, away from them, whatever. But, you know, anticipate when you come into these areas. Again, they're going to be the same areas you have to your left where you could expect some type of a reaction, right? So that's really all you're doing with volume profile. But anyhow, if you guys don't have any questions, I'm going to go ahead and cut it here. I'm going to go eat and then come back and start working on the boot camp again. Today is Monday.
I have one question. If the RSI and the Pound B are, you know, above the 50%, even the 60%, but there's no divergence, is it you know, okay to buy or sell based on what the indicators and the price action saying?
Well, right, we were expecting price to come up here today, right? We already discussed that. We're expecting the pullback, but, you know, here on your 5 minute, it's been over the 50% mark, right? I was waiting for this to kind of make up its mind. What are we going to do, right? But now here, notice it's used the 50% mark as resistance on these two areas. And if we get our line, you know, these two areas were here and here, and we had our orders sitting here, but it's right in tune with the channel, right? So you could have shorted on these two areas on the 50% mark, right? The problem with the 2 minute, the 2 minute is kind of, you know, you can't look at the 2 minute only to say, all right, I want to buy and I want to sell, you know, based on the 50% mark. The 5 minute is more, we'll hold, like, let's say if we were in a bullish day today, if the 5 minutes above that 50% mark, every time it comes down to the 50, you could buy, right, in a bullish day. And the same thing is true in a bearish day. But your 2 minute chart, right, even pay attention to this area. All right, notice we were above it and then we were below it, and price really stayed the same. Right, so the only way to trade that would have been your flat top, your divergence. You could have shorted it here, and then here in this area, you could have bought it just on the fact that it was oversold. So, you know, to say what you're asking, I guess what you're asking, I would imagine, is use the 5 minute for that, right? But when you're in a trending market. Now look at that sell-off. Now we're up to something.
Great. Thank you.
But do you know what I'm saying? Because this is what you're going to run into on the 2 minute, right? In congestion. That's why I was saying I wanted to wait for a clear sign on the 2 minute of that 50% mark and paying attention to this. So now that we're really oversold, look at where we are in relation to the 50% mark on your fib, or if we had our line drawn, it's right at the 50% mark, right? So we're oversold, but I still have my orders down below us. But did that answer your question or just confuse you more?
No, that was crystal clear and extremely helpful. Thank you.
All right, you're welcome. So not a bad day, guys, right? We got today actually worked perfect. We got that move to take out the overnight inventory. We got the move coming back down. Right, so what should be our overall plan for today, right? Where do the bears want to take it? Now that they failed to the upside, this should be your profit level, right? 650, 640 area, right? That's where the bears are going to want to bring this thing down to, right? But are they going to just flush it right down, right? You're going to have resistance in these areas, 1, 2, 3, possibly get some bounces, right? Mediocre bounces, nothing major, right? But you could expect, you know, a little 1, 2 bounce, right? Something like that. So anyway, you know, mission accomplished. Great pre-market game plan, great trading, right? We didn't chase it, we missed, but oh well, we're still in it for up 300 bucks. Right? You can't beat that. We got our profit down here. Not a bad day, guys. So if you don't have any questions, we're gonna go, right? Make any new channels when you see them. Right now, this one's getting a little bit violated. Whoa, a little bit violated. If you're gonna take a trade, pay attention to where you're at. Right now would be a good quick scalp to the upside, right? But not looking for $20, $30 profit. You're looking for what it is, a scalp, right? You're looking to make a 7-point move, 8-point move, something like that, right? But you're not looking to ride this to the upside. That move played out, it's over. Done. All right, guys, have a good one, and I will see you tomorrow.
Thank you.
You're welcome.
Thanks, Bang Bang.
You're welcome.
Thank you.